And that means we're live here on YouTube, 8/27/2019. We've got Matt, we've got Tim here, and the markets are mixed here today, Matt. Some healthcare stocks doing well on the Johnson & Johnson news. Other companies are down. We're going to break it all down. How you doing today, brother?
You know, Tim, I'm doing very good. Excited to be here with the crew.
Neutral market, right? It's neutral.
Yeah, neutral market. Yeah, we talked about that yesterday. I mean, whenever you're trying to determine the strength of the market, the weakness of the market, the trend of the market, you really got to focus on the pivot relationships here, Tim. And as long as you have pivots that are maintaining horizontal levels, both on a resistance level and on a support level, despite this downward moving 20-day moving average, which is certainly playing a little bit of a role here, that's got to have some type of neutrality rating. And it's like we talked about yesterday. I mean, it's until we see a breakout one way or the other, we need to focus on, delta neutral type portfolios, keeping a positive theta, and, picking our spots from a directional trading perspective.
Pretty simple mechanics for me and for you and for everybody out there who's been trained on how to do that. But cash flow is something that a lot of new traders do not know how to do. Cover call, naked put, bull put, bear call, iron condor, leap covered calls, things like this, Matt. It's at the essence of how you trade the market, because the market doesn't always give you directional signals. Pivot relationships are very neutral right here. We're stuck right in the middle.
Well, I get a lot of people only know how to buy stock. I understand that, but that's not our community, and that's not the people that are watching this show today, and that's not the people that watch this show later on tonight. So in terms of us speaking to our community, if you're listening to this and you don't understand how to do positive theta, get over there to the Tackle 25 and watch the Tackle 25. Watch that 2-hour course. It'll teach you how to do some covered calls. Get into cash flow condors, and rewatch cash flow condors, because not only will cash flow condors teach you how to trade the specific iron condor system on the Russell 2000, it will teach you how to do bull put spreads and bear call spreads on individual components of the market as well. And so get into the cash flow club on Thursday. There's many ways to learn how to do cash flow strategies through tackle trading. So at this point, I do believe it is important to keep a positive theta. Like I said, keep a net delta neutral right now on those trading accounts, maybe not on the retirement accounts, and pick your spots. There are really good spots to be had, Tim. I mean, looking at IGT here, nice little bearish downtrend trigger.
No. I've got to pause you because we cannot bury the lead. Matt, we top 5,000 subscribers on our YouTube channel here.
Yeah, that's good. Yeah, golf clap. Thank you, Tackle. Thank you, community. Love you guys. That's awesome. Let's go to 10,000 now.
Yeah, no, it's noteworthy, don't you think? And something that we should golf clap on and celebrate. And thank you out there for Team Tackle and Halftime Crew for being here every day.
Well,
yeah.
Let's celebrate it for 5 seconds, and let's go get 10,000 more.
That's all I'm about. Exactly right. So IGT in a bearish retracement. You see a pivot. You see a confirmation on Friday. Follow through here today. Is this a new trading entry point for you?
It certainly could be. I mean, you're closing underneath the lows, and we can. So many times we get so micro analytical about looking at these technical setups, when sometimes it's like, yeah, you got a good trend, you got a good pattern, just make the trade. No, don't make it overtly complicated. Yes, it would be a new trigger for me in a bearish downtrend. But again, just kind of looking at the overall market, even on the bull side, looking at, EDU here, threatening a breakout after a nice little cup and handle type situation, breaking out of 110, doesn't have anything really kind of to the left of the chart. So there's going to be opportunities even in a neutral market. There's strong trends that can be had. It's a stock pickers market. And like I said, I'm going to say it again and again and again. Delta neutral, positive theta, pick your spots. Mute, Tim.
I said, yes, I agree with that 100%. Delta neutral, theta positive is the nature of the market right now. As I look across the different indexes, by the way, the market wanted to rally here this morning. It just ran into all this neutrality and a lack of conviction, because we still don't have clarity on the trade war, where we're heading, or whether or not that phone call actually happened from China coming into Trump and the administration. And so,
Tim, we're going to go through a lot of these headlines, and we'll talk about Philip Morris and Altria and U.S. consumer confidence and Johnson & Johnson. But, I got down to the trade war, and I like in my notes, Tim, I just said, who the hell knows what's going on with the trade war right now?
Mhm.
I mean, there's somebody's flat out lying. Somebody is, whether it's China, whether it's the US, and it just changes. It seems to be changing every hour to a certain extent. And I'm sure that's extremely frustrating for a lot of people in the market. And I know it's extremely frustrating for, as an active trader. We want clarity. We're not getting clarity, and we're getting more whipsaw action out there in the market from a day-to-day perspective.
Yeah.
The one thing that I think both sides can agree on is that they're both just tired of it. Just ready for it to be over. Now, how it ends and how it resolves.
Well, I think we're ready for it to be over. I don't know if China's ready for it to be over.
The Chinese people might be. I mean,
well, I think the American people are too. I mean, the farmers in the Midwest are ready for this trade war to be over. The car manufacturers are ready for it to be over. Silicon Valley's ready for it to be over. And the American consumer does not want to pay higher costs. So I think everybody's ready for it to be over. I think the Chinese consumers are most likely ready. I think the entire globe is ready for this trade war to be over, except two people, and that's President Trump and that's President Xi Jinping out of China. It's going to be interesting. But yeah, I will tell you, did you guys see this headline? William Dudley wrote an op-ed piece. I don't know if it is an op-ed piece, but he wrote something in Bloomberg, I believe. And he was encouraging the Fed to help sway the 2020 election against Trump. Did you guys see this?
No, I just
didn't see this.
I'm looking at the headline right now.
I'm dead serious.
Fed President Bill Dudley encourages one-time colleagues not to help Trump's disastrous path of trade war escalation.
Let me just make sure we're all clear on something. William Dudley is the worst central bank, not president, but co-president in the history of the FOMC. William Dudley was one of those individuals responsible for bailing out all of Wall Street banks in 2008, 2009. He was one of those responsible for quantitative easing, and he created an environment of free money policy. And he talked about going low interest rates for 10 straight years. And now he's not part of the Fed, and he's writing op-ed pieces talking about how the Fed should help sway the 2020 election by not.
That's not what he's saying. I'm reading it right now. I don't know if that's what he's saying. I think they got the headline somewhat a little bit wrong. I think what he's saying is if Trump wants to bully us,
that wouldn't be the first time, but I digress.
If Trump wants to bully the Fed, push back. He's the one risking his election.
He talked about not helping President Trump by lowering interest rates so that he could get him out of office, or not him, but that they could help get Trump out of office so that they could get away from this trade war. And the Fed is an independent arm in America. That is absolutely ridiculous. It should never happen. And everybody should be like, William Dudley, just go sit in your corner somewhere. Stay away from the rest of humanity, get away from everybody else, just leave us all alone. That the Fed should not be a political arm.
What if the position is that we're not a political arm and Trump keeps threatening us, and so screw you, we're going to do what we want. You're the one risking your election.
Rise above the fray.
Yeah.
Do your job.
What a mess.
Every president yells at the Fed for, maybe not in Trump's language, but every president yells at the Fed to lower interest rates. Do your job, Fed. Step up to the role. You guys get paid very, very handsomely. You own the dollar, so shut up and do your job.
Oh, the New York Fed and Bill Dudley. It makes me think of that old post you did on our blog about making the Fed movie. I could still do that. Who was Dudley?
It was the guy. Oh, he was a snaky actor too. Like I tried to find the most creepy actor.
James Woods?
No, it was not James Woods, but that would have been a good one. I got to remember it. I'm going to find him. Keep talking.
Yeah. As I'm looking across the markets, Dow, S&P, NASDAQ, Russell, actually the Dow's down 0.47%, S&P down 0.37%, NASDAQ down just a hair, NASDAQ holding up just the best. The Russell is under the most pressure, and we've talked about that day by day as we're breaking these markets down. Matt, flash fire through all of the major indexes real quick and see if you see any differences in them.
You're supposed to keep talking.
Well, we can keep talking about the RUT. I'll tell you this.
Trying to get you to keep talking while he looks up the video.
I find this guy.
Isn't that Cody's job? Isn't this the perfect time for Cody? Find that
bad guy. He's a bad guy in like one of the Charlie's Angels movies, like one of like with Drew Barrymore and
Bill Murray.
Hell no. What?
All right. I'll look him up. I'll look him up. You analyze the market.
An icon. I would never associate Bill Murray with William Dudley. William Dudley's one of the most hated Fed members of all time. Anyways, looking at the S&P 500, showing some weakness on the intraday. I'll tell you, Tim, talk about the headlines just getting it wrong this morning. When I woke up, I looked at Twitter and I saw all the headlines. European markets up, Asian markets up, U.S. markets, futures market up. And I'm like, okay, that's could be a good, nice little bullish day in the marketplace. And here's the cash open, Tim. Boom. It's just absolutely just kind of got blasted coming out of the cash open. Good appreciation on the overnight action coming into that 2,900 level. Obviously, 2,900 acting as a little bit of resistance. And, we had a really good consumer confidence report today. And so when the consumer confidence report came out, that's kind of what we saw right here, came into resistance. But I'm just thinking there's a lot of people that just don't believe the trade talks are back on. And you just saw a little bit of a profit-taking, risk-off environment. And now you're starting to break that support level intraday. You're threatening the support level at 2860, kind of what we talked about yesterday. A break underneath 2860 would be a new trigger here on the intraday chart.
I'm carrying, leap put options on the SPY as insurance and delta hedging, and I'm not going away from that, Matt. I probably will carry it the rest of the year, quite frankly.
Check that link. Is that the guy you're talking about?
You probably carry it for the next, at least through the election.
Might carry it for the rest of my life, quite frankly. I like having a hedge naturally at some level in my account against my equity positions, against my leap positions, things like that. Today is just more confirmation of that. You can have a huge backwards update in the market.
This is who played William Dudley.
Crispin Glover.
I thought it was a great pick.
That's a good pick. And Matt, this has risk of breaking down further on the intraday. If you look at 2860 on the S&P 500, we're now pushing that on the 30-minute and the hourly chart. There's not a lot below us here. I mean, if this market wants to spin out of control, by the time we get to the halftime report, it tends to not spin out of control, but these are not good signals intraday.
No, they're not. And usually during the midday low, the market kind of just hangs out there and we can kind of look at the analysis. But you got a lot of price action coming into that. You can see that support level right here at that 2860 level. If you break that 2860 level, should have price appreciation down to 2840, maybe even 2820 down there as you find your next levels of support. And that would obviously bring it back down into the 200-day moving average. I think we're going to have some action here. Maybe not today. Today's not, we're still only down 18 points on the day, but you're looking at some downward movement in price. And I expect that 200-day moving average to play a role this week.
Dow and the NASDAQ look the same to me. Give me the Russell, though. 1450 on the Russell, significant, guys. And we are looking at a level here that if broken and violated and we sell with pressure, I would be hedging bull put spreads, even if they're 100 points out of the money, 200 points out of the money. I'm seeing tons of downside. There's no floor down here until about 1250, Matt. Now, could you argue there's a stopping point at 1310 and some, maybe, but there's, for the foreseeable chart, not much down there. What do you see on the rut?
Same thing you're seeing, T. That 1450 level is very, very important for the Russell 2000. It's held up multiple times over the course of the last couple of weeks. A break underneath that level, 1300, is absolutely in target there. And for it to get down to 1300, obviously the market would have to break the 200-day moving average as well. Without the market breaking the 200-day moving average, yeah, you could probably see 1350, 1400, but I'd be a little surprised to see the Russell 2000 just get absolutely blasted down to 1300 unless the market breaks that 200-day moving average. So I'm certainly, I don't trade as many condors on the Russell as you do, but I will tell you if the Russell closes under 1450 and the market doesn't close underneath the 200-day moving average, I probably wouldn't aggressively manage something if I have like a 1300 type of a put option or a 1320 type of a put option. You still got a tremendous amount of range. But if you get the combination of the market breaking its 200-day moving average in the Russell 2000 continuing to perform the market, then the Russell's not going to be kept up with the S&P. At that point, I think that you got a lot of weakness there and you should cover at that point.
Bring up the dollar, if you will. We're going to come back to stocks for a minute, but I do want to talk about some economic data. And whenever I think economics, I think about the dollar. Consumer confidence came in at, what was it, 130? I mean, the number was very, very strong, higher than expected, and actually just a reflection that there's not all bad in the economy right now. I know the trade war is grabbing our risk. We're talking about fear. The economy's
lag.
I know.
Well,
I know.
Consumers don't understand economics, Tim. Consumers have a job, they spend their money, they're happy. Okay, that's number one. And so it's a lagging indicator, but it is a positive indicator. And, Mark, he had a great tweet on the Trading Justice Twitter account where he talked about how consumers are happy and singing La Vida Lovo, whatever that song was. And, my response to it, I said, it's the American consumer that is solely responsible for keeping this house of cards alive right now.
Mm-hmm.
I mean, they are still extremely happy about what's going on out there. I mean, unemployment's still at 3.6%. Inflation seems to be under control a little bit. So the key factors that consumers look at, the market's, near all-time highs, they have a job, inflation isn't completely out of control, they can go on a vacation. These are the things consumers look at to make a decision if they're happy or not. They're still getting a company match at their 401k. The market volatility hasn't spiked tremendously. Consumers start getting very lack of confidence once their 401k starts to be a little concerning, once they start to see headlines coming out there, once they start to see things after the fact. It wasn't until Lehman Brothers in 2008, Tim, that the American consumer is like, oh, well, something is right here, right? So yeah, good economic report, much better than expected, by the way, much better than expected, coming in at 135.1, not an all-time record, but it's certainly a positive report. That came out at 8 a.m. in the morning.
Yeah, Mountain. Yeah,
Mountain Standard Time. And so when you're looking at that consumer confidence report on the dollar right here, you did get that price appreciation, but it was not necessarily enough to break that intraday resistance level at $98.08. If you can, maybe you see some price appreciation there, but it's really kind of stuck in a range today.
Yeah, casual uptrend over time on the dollar. I've got a 0 to +1 kind of rating. I'm still going to stay bullish as I look at the fundamentals of the dollar. The trend, I mean, the short-term action in currencies has been just random, very unpredictable. It's day trading or position trading for me, Matt, with currencies lately, and that's kind of the theme of 2019 in the currency markets.
Yeah, for me, it's day trading.
Yeah.
That's it.
Moving on to crude oil and some of the energy stocks as well. We're going to come back to companies here when we do our rapid fire at the end of the show. And by the way, if you're watching our show right now, subscribe. We just popped 5,000 subscribers. We love it. We're proud of it. Subscribe, like, click the bell, and get the word out there. Crude oil still kind of casually bearish for me here, Matt, holding up, actually up 0.63%. And there were a couple of news headlines. Iran came out and said that they were going to rule out some talks on U.S. sanctions until the U.S. lifted some of their sanctions. That's shown as some bullishness for oil, I guess. Don't really follow that logic. I still see bearishness.
It's supply side economics.
Yeah.
Stuff that you and Mark got in a good little debate yesterday during the podcast. But yeah, Iran says no talks as long as sanctions remain, and the U.S. isn't going to remove sanctions. The U.S. and France in Trump and Macron just in the G7 both agreed that Iran should not have nuclear weapons. So I don't see those sanctions coming off anytime soon.
Yeah, I don't really see it either. You got support down here, 52 and 50. So you've got a lot of floors that it would have to break through before it really becomes bearish. Neutral cash flow on crude oil kind of makes sense to me. Looking at some of the energy areas as well, Brent oil, gasoline, heating oil, they're all bearish. Take a quick peek at natural gas. Have a little bit of a bottoming pattern developing down here. Now, I know we're below the moving averages. We're in that bear zone. But from a pivot to pivot relationship, Matt, it's starting to feel like it wants to roll a little bit. What would have to happen on natural gas for you to get interested on the bullish side?
It'd have to go to at least 2.4, retrace to 2.2, hold 2.2, and then you have a bullish retracement on the short term.
Yeah, I still am not touching it there either. I'm not playing it bearish though. I don't feel.
Neither am I.
Yeah, I'm kind of on a stay away. I would love to see a breakout or retracement and then get back into some of those boomerang trades on UNG and similar type of products.
I would have played it under 2, Tim, but with 2 holding, no, I don't think there's a bearish play here on natural gas. I think there's more cash flow strategies.
Gold and silver. Silver's up 2.8% today. Start with silver.
That's the lead. That's the lead. It's not tackle crossing 5,000. It's the fact that silver is on a net tear yesterday, And Tim, yesterday, in the podcast, we talked about the GS ratio, and, I went back through the history of kind of the gold and silver, and, what happens is that ratio kind of contracts. So I hope you guys enjoy that conversation as you're listening to it on the podcast. But silver can absolutely fly in these precious metal booms. And, we kind of made fun of Wells Fargo for telling people not to buy gold yesterday. And I said they're going to say the same thing when gold's at 2,000, and they're going to say the same thing when silver's at 20 to 22 here in a few months. This is bullish right now, and maybe you don't re-enter here if you missed out on this breakout last Friday, or if you missed out on the continuation yesterday. Maybe you don't trigger at the high. Maybe you wait for something to retrace or consolidate before you trade it again. But silver needs to be on everybody's watch list.
No question about it. Silver's bullish. Gold also still very bullish. It's only up 1% today, but it had kind of made that run. That gold silver ratio you were talking about on the podcast and just now, it is catching up now. It's that's going to be dropping as it outpaces.
That's
gold.
what you see though. When the GS ratio starts contracting, silver's up 2%, gold's up 1%. Silver's up 1%, gold's up 0.5%, right? So gold being that safe haven type commodity, silver being a boomer bust type commodity. But in these booms in silver, and they don't happen very often, Tim, they just don't. Silver's one of those commodities that just kind of gets stuck in ranges for years and years and years and years. And so when you're looking at this from a time perspective, I just want to kind of show you it very quickly. Let's go on the monthly chart here. Then let's go max available. You have these booms in silver, right? You had this boom in the late 1970s when silver and gold first got introduced into the futures market in I believe it was 1974. And silver's right here at $5, and it just over the course of like a year just booms into $50 and it gets absolutely crushed. And you might say, well, Matt, what really kind of led to that crush? Margin requirements led to it. In 1981, 1982, you started seeing, 1980, 1981, Chicago Mercantile Exchange started increasing margin requirements because people were making too much money on silver. And that kind of drove them to drive back down in price. And then you see this like literally for 15 straight years, Steve, 20 straight years, silver's just stuck in that mud, just not doing anything. And then right here, in 2009, at the kind of the end of the subprime market crisis, Tim, you started seeing negative interest rates from around the world. You started seeing quantitative easing galore. You started seeing ZIRP and toxic asset repurchasing programs. And in that environment, silver just drives, and we call it the Great Silver Boom of 2009 through 2010. And then what really led this to stop going back up once it dinged 50? Margin requirements again. The Chicago Mercantile Exchange came out and said, you guys are making too much money. We're going to increase the margin requirement. It drives it back down. And now fast forward 10 years later, Tim, you're starting to see the same type of economics start to play out. You're starting to see the price appreciation on silver being very, very aggressive. And so when somebody says to me, oh, Matt, silver's already made its run. It's went from 14 to 18. That's a really good price appreciation in the short term. Like, yeah, it's a really good price appreciation in the short term. But when this little precious metal wants to go, it goes big time.
Yeah. No, it's been running. It's been hot. There's no doubt about it.
I'm not projecting $50. Okay. Yeah. You never know when those booms stop, but I'm not going to be the guy that says 18 is the top when you're seeing momentum going into 18.
You know who does know when those booms stop? Jamie Dimon. He's the one who engineers.
If you would have given me another 2 seconds, I would have got there. I would have got there because he's the one who did it in 2011.
Quick peek at Bitcoin. Bitcoin's not been doing much last couple months. I've got some real concern about the patterns, by the way. They are holding, and they're definitely holding. The dollar kind of neutral, Bitcoin, but it is not really holding in a good way, Matt. You're now below some moving averages on the daily. You're holding support. I've got some concern about cryptocurrency. Anything in that chart grabbing your eye?
I look at this trend line, Tim, and I drew this trend line a couple weeks ago, and I feel this trend line is very, very important for Bitcoin right now. It's also sitting right there at that $10,000 level. If you break this down on that 4-hour chart, you can kind of see it hitting that. You break it down on the 1-hour chart. You can kind of see in it hitting that, but you also got some downward movements in price from a trend perspective as well. So when you look at this kind of downward movement in price, you got some conflicting trends. You got a downward on the intraday, you got a longer term uptrend on the daily. That's putting a lot of pressure on Bitcoin to really kind of figure out what it wants to do here. But I'll tell you, I'm a little surprised we haven't seen more price movement, either up or down out of Bitcoin. Bitcoin usually does not stagnate like this.
While the trade war's been going crazy, cryptocurrency's been settling in. Maybe they're a safe haven asset, Matt. I don't know.
Say it again.
Topsy-turvy world we live in. I'm not going to say it again. Johnson & Johnson, I want to talk some stocks before we get into rapid fire here. Some headline news on quite a few companies we got to run through. J&J had an announcement through a judge in Oklahoma that they were liable for $572 million for the opioid crisis out there. By the way, it is a national crisis, not just Oklahoma. More suits to come, I'm sure. What was your reaction to this thing, Matt?
They got off way easy.
They did, yeah.
They got off way easy.
I mean, they were looking at potentially $17 billion on this thing.
They got fined. What was it, Cody? 3%? 3% of the 17 they got fined.
They were fined $572 million when they were seeking $17 billion.
And I'm not going to sit here and act like I'm the expert on this court case. I've only been following it the same way everybody else has. But I'll tell you, some of the things I've been reading and some of the things I've been hearing, it just disgusting behavior from Johnson & Johnson and some of those other pharmaceutical companies. And I'm glad they got fined, and I wish they would have got fined even more.
Yeah.
By the way, Johnson & Johnson, a $300 billion company. How much revenue did they have last year?
They do 82 million in sales, or 82 billion, I should say.
Billion with the B.
Yeah. $82 billion in sales. What was their profit? 20%? 17 billion last year?
20% profit margin.
So they had $17 billion in profit, and they are encouraging consumers who don't know any better to get more addicted to drugs and all that jazz. And again, the court case is going to go through the appellate process, but
I think they were going after all profit.
Oh, I don't know where they got that $17 billion from. I don't know where they even found that from that Oklahoma was seeking. But this is the first court case of its kind from a state against a corporation. And, like I said, it reminded me, and I was telling Cody this, it reminded me of the movie called The Rainmaker back in the day with Matt Damon. And he plays this lawyer who basically goes up against these corporate bigwig attorneys from an insurance perspective. And you got to give Oklahoma, and you got to give those lawyers that represented Oklahoma a hell of a lot of credit here, because they were up against a juggernaut. They were up against billions and billions and billions of dollars. They were up against the best legal teams Johnson & Johnson can afford. Johnson & Johnson and big time corporations, they just put this into the legal system and just force people to die over time from a financial perspective because they can't afford it. You got to give Oklahoma lawyers and that legal team a hell of a lot of credit for standing up to that. And, good for them for getting that. Hopefully they can attack that opiate crisis in Oklahoma. But Tim, like you said, it's not just Oklahoma. Where you and I are born and raised, okay, Central Utah, per capita has one of the worst opiate addictions in America.
Yeah, Carbon County and Emory County, Utah are some of the worst there is. It's everywhere. I mean, people think about it in the cities or with the homeless or whatever those different plights might be. And the reality is it's not just that. It's everywhere across this country. We need more education. We do need firms to be held liable. And I do think they got off easy. So did the market. They actually jumped up here 1.7% on the news.
The market loved it. They're up 2% on the news. And, like sometimes people look at that $572 million fine. They're like, oh, that's a lot of money. Johnson & Johnson made $6 billion in market cap today.
Yep. Moving on, more news. Boeing is actually looking at a lawsuit by one of the people who purchased some of their 737 Maxes, and stock's not doing well here today. Some concern in the technicals, Matt, found the 200 period moving averages, 2 red candles. I know it had a big upward move developing there, but we're not following through on Boeing.
No, and I haven't traded Boeing in any capacity since that second chip went down. Mm-hmm. I've been very clear on my position. I don't feel Boeing has been as transparent as they should have been. It's not, and it's a company that is beloved in America. They're going to right this wrong. In my opinion, they are, but it's going to take some time. And, I don't think this is going to be the first airline to cancel their orders and try to get refund on their money.
That's right. I agree with that. Philip Morris and Altria, they were once one company. They split, and now they're thinking about coming back together. And now the market is dropping here.
I tell you, talk about two charts that are just crazy, just absolutely crazy. Philip Morris, you're seeing the gap down, kind of trying to fill back up, and then you have Altria Group here, gap up, get smoked back down. It just, wow. Talk about two charts that are just crazy. How do you read that?
I don't think the market knows how to interpret the merger and whether or not it's good or bad news for either company. And you had the instant volatility by market makers trying to reset the price on the gap. And then the traders are coming in saying, no, I don't think so. I'm not buying Altria on this news, or I'm not going to sell Philip Morris. Let's wait and see how it settles out. So I think the market makers probably got this one wrong, Matt.
I think they did too. But
we know they did. Look at
the chart here. Yep. But what's happening, look at 45.20. You got some major support level right here. And Altria Group is a really good covered call. It's a tackle 25 stock. I would be covering this in a heartbeat if I was doing covered calls on Altria.
And last stock, and then we're going to do rapid fire, Activision. Got to bring it up. Activision is up because they launched Classic WoW, Matt. Do you want to populate in Stormwind and run to Ironforge with no horse? Just cause for old.
Hold on. No. My go-to was not Stormwind. My go-to was Ironforge.
That's right.
I would run around on that horse for like an hour just trading. Just like literally, it was just like, because we would talk to each other on it, and we were this when we were young traders, we'd be talking to each other on WoW, while we were trading. And so, Activision, good for you, Activision, gap up above $50. I can't wait to go call Coach Frank and get my Shadow Priest Helaman back up and running. Yeah, I geek out on that stuff.
What was it? /dance, and then you did with dance. Is that what you did?
I have no clue about that stuff. No. Hey, listen, we played WoW. We were not good at WoW. No, we just kind of hung out. But I'll tell you, I like the gap up here above $50. $50 being a significant whole number. Tried to test it here. You're back up above all your moving averages on Activision here. And, close above $50. I think it's significant. There's no entry here from a trading perspective, but this is a really good covered call stock as well.
Yeah, guys, and it is that time here on
real quick. Okay, announce rapid fire and we'll talk why they put them in.
Put your symbols in the chat if you want us to look at them. You know how the game is played. If you don't, just get a symbol that you're interested in, pop it in the chat. We're going to look at it in rapid fire. And then Costco.
Yeah. Costco, breakout. Costco, keep an eye on Costco. Get it on a watch list. Costco breaking out on the weekly chart, the daily chart after a retracement on the weekly. Love that technical signal on Costco. And on the backs, they opened the first Costco store in Shanghai, China, and they had to shut it down today, Tim. Shut the store down because there was so much demand. Wow. It was just amazing on that one. Also, Roku, get this little bad boy on a watch list as well. This company, we've talked about it before. This company, it's not as big as Netflix, but Tim, its growth is amazing. In comparison to Netflix early on, Roku is actually outpacing Netflix's growth early on. Maybe they don't get to where Netflix ended up, but this is a company that should be on a watch list, and they're expected to have over 80 million subscribers. And I don't know everything about the company like Netflix, but they're supposed to have about 80 million subscribers by the end of 2025. So this just on a tear year to date, just on a tear. Reminds me of a little bit of Beyond Meat, but better technicals.
Dude, it's on the top 10 list of price and volume leaders almost every single day in the market. There's no doubt about it. And the thing about Costco, do they need to have like 2-gallon jugs of mayonnaise, Matt? That's a little bit too much fridge counter space.
Utah, are you kidding me?
I'm not saying I can handle mayo.
Are you sure 2 gallon is enough for a family in Utah?
Oh, that's a lot of egg salad sandwiches, dude. That's all I'm.
It's Utah. Maybe they don't have 2 gallons in California, but in Utah they need the 2 gallons. In fact, go 4 gallons.
Cody, come on in here, bud. You're going to roll with us here as we go. 4 gallons of mayo. Let's go with Pfizer first, PFE, Jimbo. And I'm going to give it to Matt, Tim, and then Cody will go oldest to youngest here. Matt, you got Pfizer.
Yeah. All right. PFE. Here's Pfizer, tremendous bearish downtrend, low base in the bearish downtrend. Low bases are simple consolidation. It runs fast, it gets tired, it consolidates, it breaks again. Trigger under 34 here would be rock solid on Pfizer.
Apple Computer, AAPL. I'll take this one. Now on the podcast, by the way, go listen to TJ 336. We just dropped it last night and this morning. We put the email out.
Drop the
we
link
talked about Apple.
too, whenever you do that, Cody.
It was a game we played about buy or sell in the podcast. I do think it can outperform as we go risk back on. It's on a red candle today. It's got to hold that moving average. Real big concern about the technicals if you break below 200. There's no doubt about it. Twitter next. Cody, you're on Twitter every day. Good company.
Twitter was on the options report, I believe, and it did break to the upside. It hit the first target right there at resistance, and then it's dropped back down. Now it needs to break above 43 hopefully with some good volume, and then I'll play it to the upside.
BLL, Ball Corporation, industrial play. And I love the chart. It's been on.
I love easy charts. I love easy charts.
High base.
Charts.
Yep.
What are you doing?
Is this you or me?
No.
Oh, it was easy. I wanted it, obviously. No. Like we're both instinctively going for it. Yeah.
Like this is easy analysis, and you just tried to jump the gun here. Yeah, what's going on? Come on, host.
You got it, brother.
Ball Corporation here, very easy. I love easy charts, easy trends. Get this on a watch list. Above all moving averages, good consistent bullish uptrend, high base situation. The only question is where do you trigger? And on something like this, when you have, and let me explain something very quickly. We get asked this question all the time, Matt. Where do you trigger when you got an $80 significant whole number here, but you got the high at 80.66? Drop it down into an intraday and figure out the importance of where these levels are. This was a gap up, close back down. I'm looking right here at $80, Tim. If I go 25% of the ATR above $80 right there, the ATR being currently at the time 173, 25% of that, we'll just say 50 cents. Yeah, I would say trigger right above 80.66 here.
APPN, I believe. I think
AAPN, what?
It might have been apron though. APRN. I'm thinking. Try APPN. That's what's in the chat itself, actually. APPN. I don't know this symbol. No.
There you go.
APPN has a chart. It is. Definitely jumped up off after a good earnings. If you're looking to get into this thing and you haven't already played its momentum, you need a base or a pullback or something because you got some slowing momentum at the top. Not a good entry point right now.
That's at a target point. Yeah, that's at a target point, not a new entry point. There's no doubt. Facebook, Matt, I'll take this one. I've thrown my entire rotation off here. We're just going to randomly throw them out here. Facebook actually was leading the fangs to the upside. It's one of the only stocks actually up today, but that is not a bullish chart. Casually bearish chart, maybe neutral if you're trying to find something like that. Chipotle, Matt, you get this one. Who better to analyze Chipotle than Matt Justice? What a breakout up here.
Listen, I'll trade this overpriced burrito company all the time. I just don't like their burritos. Really, really good bullish uptrend, very consistent on the 20. It loves the 20. It just broke out. That is a re-enter. This stock just doesn't want to stop, and I'm not going to be the one that says it's too high.
EA, Julian out there. Jonathan.
I don't have to look at that to tell you that it's neutral and it's good cover call stock, but make sure you know how to manage it because it can be volatile at times. But overall, that chart is a neutral chart.
FedEx, I'll take this one. FedEx and the shipping company's been under pressure here recently. It just broke down. It was on our option report. Go check it out. What a beautiful looking stock. Earnings coming up here end of September, Matt. So be aware of that. But good find on that one. And let's keep moving through here. HCA from eMay out there. Matt, you get this one.
HCA, we talked about this one last week. As you can see, I drew the line, talked about how it was breaking down here as a re-entry. Now you're a little bit of overextended coming into this type of movement here on the type of price movement 1, 2, 3, 4, 5, 6 days. Already 6 days into that. Looking left of the chart, it is breaking a support level at 120, though. You should see price depreciation. The only support level is around 110 here. A little bit overextended coming into that, but even at that, I do see the breakdown of 120. And if we do get some depreciation, I mean, 110, 112 in target.
Yeah, I agree with that. Checkpoint, CHKP.
Checkpoint is having a breakdown below that level around 107. It broke yesterday and it's continuing to break today after a gap up. I can see this thing easily targeting 104, 100.
By the way, this is what I love.
Target. 104 to 100. That's a good target.
Hashtag team tackle, hashtag halftime crew. Look how many bear picks our team out there is throwing out there, Matt.
Not only bear picks, but good picks.
Really good bear picks, technical setups.
Yeah,
I love it. Yeah.
Real solid setups today, team. Really love it. Thank you for the intel.
It's not just stocks in the news.
Yeah, for sure.
Yeah,
NVIDIA.
Yeah, that's true.
NVIDIA, I'll take this one here. And neutral, maybe a bi-directional play. You could probably do something with volatility. I'm neutral on that one in the short term. Keep coming up with, we already looked at Costco, CF from Majid.
CF Majid, this is a head and shoulders reversal formation here. Tough to trade because you have so many different support levels here. But you got the left head, you got the left head, you got the left shoulder, head, right shoulder. And then as you can see, if you draw this trend line here, connecting those support pivots there, that neckline just got violated a couple days ago. Should see price depreciation. And they're tough to trade because when you look left to the chart, there's so much noise over here. But that should come down into that 200-day moving average based on what I'm seeing in the chart.
Yeah. And guys, that's it. That's rapid fire. And that's our show as well. Obviously we love coming in here, talking markets, going through our routine, all those kind of things. So many things that we're doing at Tackle Trading tonight, the coaches show. If you're a pro member of Tackle Trading, make sure you get over there. Join us each night for those webinars. There's a lot of great content out there. And by the way, go watch some of the replays over the last couple of months. I really like on the coaches show replay page, Matt, how Christian has started labeling them with the title of what we covered in the show. And we'll promote that as well. And then also our podcast, Matt, that podcast was a fun one. Kind of pitch it here, if you will, for a second.
Yeah, here's the coaches shows and replaying what was covered. And, we try to tackle a strategy once a week, Tuesdays for Delta, Thursdays for Theta. Hope you guys are enjoying that. And we had a nice little podcast yesterday where Rob Embers came on talking about cybersecurity. It's a fascinating topic. It's an absolute fascinating topic. And anytime we bring on a cybersecurity expert onto the podcast, I get freaked out. I just get freaked out. I'm like, no, get out, Alexa. No more Alexa. No more this. No more that. But it's an important topic for people to understand. So we felt like we bring Rob on, and I felt he did a great job. Talked a lot about the trade war and talked a lot about, Trump's response in the trade war and, trying to figure out what the plan is there, trying to figure out what a win-win solution looks like from a U.S.-China's relationship perspective. Mm-hmm. And then Mark had us do a little buy sell at the very end where he read a recent headline. And if we believed in the headline or if we didn't believe in the headline. So we had a little fun with that one as well.
Here we are, last thought on the market. It's 1:15 Eastern time, and the market is trying to hold itself up. You tend to kind of fade into the middle of the day here when you go into lunch on the East Coast, Matt, understanding the intraday market cycles. But I'd be very, very aware of 2860, guys. Before you go to lunch here today, I would put an alert at 2860. I'd be aware of it. I'd have your deltas hedged. But if you're trading properly, Matt, even a breakdown, it shouldn't really affect your net account too much. You got to be positioned correctly, especially in a theta environment. Great job today, Matt. Great job today, Cody. Good show, guys. Always appreciate it. It's always good to have you guys here. And we will be back tomorrow. Maddie, we're out.